Hello, this is the tradesight Forex Roadmap and Index Alert for the week beginning Sunday, March 10th, going into Friday, March 15th, 2013. Hope you had a good week. Here's a look at the dollar index daily chart on the right side of your screen. We've obviously had a strong move up here. You can see the trend line that we had been watching at the low side that we held just back at the beginning of February. Got that nice turn up. Broke the downtrend line that's been in place, so I'm going to pull both of those lines off of our charts at this point. They're not really relevant to us where we're at right now. We did get a 9-bar move up here in February, a setup phase, and you'll notice where the box closed is here that we finally broke the 4-bar look back, and we're still proceeding higher. This is the seeker count on the red numbers here, and that puts us at bar 5 as of the close today. So obviously still a lot of room from the seeker's perspective in terms of where this thing can go to the upside, so that's very positive. Here's a look at the euro-dollar daily chart. Obviously, it had rolled over a bit in February to help the dollar index out. And you can see that it's actually about to break lows, breached the lows actually of the last 2 months here on Friday. Didn't do a lot this week, although we did have some nice winners this week in the euro both ways, long and short the market. Been nice to see the ranges come back. We'll talk about that in a moment. And here's the pound dollar chart, and you can see a lot of trouble here. Here's the seeker count. So the pound's been in trouble, really weak, even when the euro was still heading up. Now the euro's rolled over as well. This is heading down here against the dollar. So the dollar is strengthening against the pound. We got a 9-bar setup way back here, and another 9-bar setup. But just before that second 9-bar setup closed, we did get a seeker 13 buy signal. From that, you get a pink risk line. The risk line serves two purposes. If you get long, you're going to use it as your stop. The other thing for us is, if it breaks fairly quickly, and this is definitely fairly quickly, you can see we bounced off of it once here, but it breaks fairly quickly, within about 2 weeks in this case, less than 2 weeks, usually leads to a bigger, sharper move. So at this point, we've confirmed the break of the risk line. It's real negative for the pound dollar. It could sell off here sharply. And again, we just want to keep seeing those good ranges. Speaking of which, let's talk a little bit about the ranges that we've seen here. So the pound traded about 140 pips Thursday going into Friday of range. It traded about 120 here the prior day from Wednesday going into Thursday. Traded about 150 here as well the prior session. So that's pretty good. Let's take a look also at the euro and its range. And if you look at the euro here, by the way, this is amazing. This is our Comer count on the move on the euro last night when the non-farm payroll data hit was way above expectations. You get this big, huge move down, and it gives you the 13 buy signal right at the low. That's pretty remarkable. But again, the euro sees, in this particular case, about 160 pips, 180 pips of range. The session before, we had a nice winner on the long side. So last night, nice winner on the short side. Here, nice winner on the long side. And we end up with about 150 pips of range. The session before, we had another nice short and about 110 pips of range. But as you can see, what's important here to the market is that we get these ranges. If we're getting ranges like that, and for a while last year we were seeing 60, 70 pips of range daily on the euro, it's just not tradable really from a trading perspective the way we approach it. But when you get 100, 110, 120 on the euro, 140, 150 on the pound, it becomes very tradable, and that's why a lot of these trades have been working out a lot better here. Let's pull up the news for the week. Let's take a look at what to expect so we can sort of roadmap out what's ahead, and here's a look at it. Again, we've got the time change here in the U.S. and Canada. That can have an impact. Japan's core machinery orders, M2 money supply, China new loans. Okay, going into Monday, no U.S. data Monday. Trade balance out of Germany, French industrial production, Switzerland's retail sales, monetary policy meeting minutes from Japan, along with their tertiary industry activity and CGPI, 6:50 p.m. Monday night Eastern Time. Australia's business confidence number, Japan's consumer confidence, Germany's final CPI, UK's trade balance in manufacturing production and industrial production. Finally, the US has one minor data point, and then the Fed budget balance 1 p.m. Eastern Time on Tuesday. FPI out of New Zealand, home loans out of Australia. Not too big a deal so far this week. Heading into Wednesday, got the French CPI and non-farm payrolls, industrial production out of Europe, some bond auctions. Now US gets some data finally Wednesday morning. Core retail sales, import prices. Business inventories a little later, crude oil after that. They got the 10-year bond auction at noon Eastern Time out of the U.S. We had a rate announcement out of New Zealand. Everybody else had theirs last week. Aussie dollar, Michigan inflation, the Australian inflation expectations. Unemployment data out of Australia, 7:30 p.m. Eastern Time Wednesday night. Revised industrial production out of Japan. Got the LIBOR rate out of Switzerland, 3:30 a.m. Eastern Time Thursday. Employment change data out of Europe. Capacity utilization rate out of Canada in the morning on Thursday. And then PPI unemployment claims current account out of the U.S. We've got natty gas at 9:30 a.m. Eastern Time. 10:30-year bond auction at noon. The bank stress test results come out at 4:30 p.m. Eastern Time on Thursday. PPI out of Switzerland on Friday. CPI out of Europe. CB leading index out of the UK. And then the big one for the US this week, core CPI. That's one of our big three we'll be half size ahead of. Also keep in mind that this week is triple expiration. That's options, futures, and commodities all expiring at once this Friday. So that has a factor in slowing down usually action in all the markets. Empire State Manufacturing, tick long-term purchases, and then capacity utilization, industrial production, and finally Michigan sentiment. So we'll see how the week plays out. We'll have the calls on Sunday. Have a good weekend.